Hi everybody, it's FIBO Group and you're watching to the Market Watch review. The Reserve Bank of Australia suggested that it was closer to a rate increase. The Australian dollar was at its highest level since middle of last year. Australian stocks rose in a mixed session, while Hong Kong and China markets were closed due to holiday. European equities have moved higher and Stoxx 600 is at its highest level since mid-February. The European morning has seen U.S. futures decline. Yesterday's 4% increase in May WTI was extended to an additional 1% to push the $105 per barrel level. Asian Pacific market. The Reserve Bank of Australia had to drop its reference of patience, and that was enough encouragement for the market. Important pieces of the policy puzzle are still the upcoming inflation and next month's wages. Separately, both the composite PMI and preliminary service were revised lower. They now show a decrease from February. With the surge to $0.7640 today, the consolidation phase in Australian dollars has ended. The foundations for recovery are becoming more clear as the Japanese economy was hampered by the earthquake and pandemic that hit Japan in the first quarter. The median Bloomberg survey forecast that labor cash earnings would be twice as strong, but they were not as strong as actual results. The March service PMI was revised up from 48.7 to 49.5, while the final composite reading was slightly higher than the 50 boom/bust level. Today's dollar trades quietly against the Japanese yen, mostly within yesterday's range. Market of Europe. The Eurozone PMI final readings were mixed. The aggregate PMI for Eurozone services was 55.6. This is an increase from the 54.8. The composite was revised to 54.9 from 54.5. However, it was still slightly lower than February's 55.5. Today, the euro consolidates in a narrow quarter-cent range of $1.0990 to $1.0990. The UK PMI was revised higher than the initial estimates. Next week, the UK will report on inflation and employment statistics. Sterling seems to be moving slowly. It trades in the same range as last Wednesday. Today, it trades with a more firm bias, but is still below $1.3150. This is close to the peak before the weekend. Market of America. U.S. has taken another step to subdue Moscow by using the dollar as a weapon. Russian government accounts won't be able to make dollar payments via U.S. financial institutions. The U.S. reports February's trade balance. The significant decline in trade should not be hidden by a small improvement over February. Canada reports its February goods trade balance. The median Bloomberg survey indicates that Canada's January-Feb surplus is slightly higher than the previous year. The U.S. dollar trades at a 4-day low against the Canadian dollar, near CAD 1.2460. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.